When you think back to the early days of the commodity business, I know that there's a lot of similarities that you see. Maybe talk a little bit about the oil market and kind of what happened in those early days and how that
Sure.
compares to crypto today.
It's remarkable how much this rhymes with the past. So let's take, the 20-year period between sort of, I don't know, 85 and '05 or something in that bracket. And, at the beginning of that period, there was no oil price. There was oil, but oil was a regulated business, really, and regulated prices. And oil was $40, said the Saudis, and that was it, and then everyone would say, well, you're 40, I'm 35. And there was no freely traded market. And I was actually in the oil market then. It was a logistics business, just had to get stuff from A to B. And then the price deregulated, and all of a sudden it started to move. And with that, in came, Goldman Sachs, in came Morgan Stanley, Drexel Burnham Lambert was around at the time, AIG, the insurance company, and they started to get involved. People started to build big trading companies that were trading merchants, sort of not oil companies, not refiners, but people just sort of participating in the industry itself. Contracts started to grow, one exchange, two exchanges, three exchanges, started to build derivatives, started to build options markets, started to grow. And that was a very steady increase in activity, let's say from the late 80s to the late 90s. And the market, when I started in that marketplace, there may have been 100 people that traded oil in the world. And I probably knew all of them. And by the end of that first phase, there might have been 1,000 people in the world trading oil, and I knew most of them. But then something, very different happened. Two things happened, actually. One, the oil market went electronic. So it was no longer sort of a voice and over the counter like a lot of other markets went electronic. But more importantly, this new theme started to emerge. Now, the old way of thinking about commodities and what all the people in I call inside baseball section of that 20 year, the first 10 years of the 20 years, everyone talked to each other. Everyone looked at the same thing. And they were looking at things like, is there enough oil in this particular arena, be it Europe, the Gulf Coast, Asia, for the next 2, 3, 4 weeks? And that was usually determined by, is oil being arbitraged away? Is the weather bad and ships can't sail or can't load? Is OPEC doing something funny with the supply? Is there some political strife? Is there a Gulf War going on somewhere? And it was all about what happens, 4 weeks from now. And that's the only thing that mattered. In fact, there barely was a forward market in crude oil back then. It was all traded in that very spot period. But what happened in the late 90s was we and others began to realize that there was a long-term story around commodities, in particular crude oil. And it was to do with China. China, if you just did the simple math, how many people live in this country now? What is the birth rate? How many people will be living there in 15 years? How many of them are driving cars now? How much gas are their cars going to use? It was very obvious that at the prices crude oil was, you could not fill that gap. And you could have said that about copper, about iron ore, and about multiple commodities that China ended up consuming a lot of. And so what then happened was, instead of a 4-week narrative, a 4-week time horizon for the bullish bearish narrative, it became a 10-year horizon for the bullish bearish narrative. And that's when the institutions arrived. And I feel that's the point we've been through sort of since September, since Paul Jones's famous investor letter, which I think was a seminal moment in commodities. Funny enough, Paul and I did business, way back in the commodities space as well. And so to see a guy like that, and he is smart, right? And he's very well funded, and he's a fabulous trader. To see him come into the crypto space, to me, that just rang a lot of bells back then. And clearly it was, the precursor to all of the things we've seen in the last 6 months or so. So anyway, along came, in this second, phase, along came these institutions who weren't worried about this 4-week horizon, but were worried about the 10-year horizon. And that absolutely, totally changed the way the commodity market even functioned. And it led to a very protracted rally in prices and the technologies that were spawned on the back of it, because the price of oil needed to go up to create the extra calories and the extra joules and whatever units of energy you want to use. Because at the prices it was before, there just wasn't enough to go around. And it spurred technologies like wind farms, biodiesel, syncrude, energy saving, electric cars. I mean, all of these things kind of spawned from the fact that, if oil was still $10 today, none of those things would exist. So not only did it, was it a huge portent for the energy business, but it actually changed technology and energy technology forever.
When you think through a lot of what we're kind of seeing play out here, deregulation is obviously a very big part of the story, but also it sounds like the commodities business in the early days was this like inside baseball game, right? And inside baseball, not from a negative connotation, just like you had to be paying attention nonstop. You had to really be in the flow of things. You had to understand the nuances and the details of the market, and the people who did that had a significant advantage. It sounds identical to crypto today, right? If you're not paying attention 24/7, you're likely not to do very well because there is so much nuance. Things change so quickly. Do you see similarities between those two things?
I absolutely do. And, let's face it, a lot of us have been sitting around here for the last decade, and, we probably spent half that decade going, is there going to be an ETF? Is there not going to be an ETF? Is there going to be an ETF? It's like just this craziness around whether there's going to be an ETF or not. And again, I think a lot of the people coming in now are just looking at the sort of a little bit of a demise of the dollar, a little bit of loosening of this US dollar hegemony around the world. They're looking at sort of debasement in the fiat money system, which is, usually happens to most fiat currencies over a long period of time, but maybe been accelerated by some of the balance sheet damage done at the Fed and other central banks. And they're definitely coming in and they're looking at this short-term dynamic. So you've got the right clients coming in, but probably with the wrong dynamic. I think that what they're going to start to figure out is that the narrative around crypto is much, much bigger than that. And it's around replumbing the financial system and probably some other systems as well. But replumbing the financial system is long overdue. And I don't think even the most adventurous people coming to this market, like Michael Saylor, like the Ruffer Fund, that bought a whole bunch of Bitcoin in one slug, and some of the other names you're seeing, they haven't been watching this market 24/7 for 10 years. And I don't think they really, you need to have a kind of a gut feel about where things are going because there are so many moving parts. But I've begun to really develop this theory about where we're going to be in 5 to 10 years' time. And I think that's something which, I have to hang on to that when I, guide the company, when we make long-term investments, when we take risks. That's something very much in my mind. But I think that's going to become much more common. And I think we're going to see, I've sort of tried to concatenate these thoughts into the 3Ds, digitization, driverless banks, and distribution. And I think those are going to be the sort of north stars of where we're going in digital assets.